The broadcast is now starting. All attendees are in listen-only mode.
Hi folks, welcome to the monthly Understanding the FAIRtax webinar. We're going to wait just another minute or so to give a few more people a chance to log in, and then we'll get going. I see a couple of names that I recognize. Hello Barb, hello Randy, hello Josh, although I've never met Josh except for on Facebook. Okay, well, I think we might as well get going. Again, welcome.
Make sure you start the taping.
Yeah.
The record.
Yeah, it is. Again, welcome everybody to the monthly webinar. The presenter tonight will be Jade Wally, who's a CPA from the Colorado area. My name is Ron Malero, and I'm on here with my wife, Elaine. We are volunteers with the Florida FAIRtax Educational Association, and the Florida FAIRtax has sponsored these webinars for about 10 years now. So it's getting to be quite a tradition. And Jade is relatively new to the FAIRtax, but he has studied it like nobody I've ever seen. So he's very knowledgeable, and being a CPA, he's got a unique perspective. Make sure everybody understands that there is a question box in your little control panel. You should see a control panel on the right-hand side of your screen, and it's got various aspects. One of the things, you can ask a question, and we're going to have the presentation. Jade is going to go through a certain part of it, and then he's going to stop for question and answer. We're going to have 2 Q&A sessions. So if there's anything that that you're not sure of, if you have a question on his presentation or something about the FAIRtax, don't be shy. And anyways, I'll turn it over to you, Jade. It's all yours.
Thanks, Ron. Can you hear me okay?
Yep, I can hear you fine.
Loud and clear.
Welcome, everybody. Appreciate your time this evening to be involved with the FAIRtax, or maybe if you're new, learn a little bit more about the FAIRtax. As Ron said, my name is Jade Wally. I'm a CPA, been a CPA since 1996. I'm a partner in a Big Four accounting firm for 22 years. And I did go to Oklahoma State University for my bachelor's and master's, and I did want to give a shout out to the Oklahoma State University graduate accounting course students who have logged in. A few colleagues of mine and myself are presenting tomorrow here in Stillwater, Oklahoma at the graduate accounting practicum course on the topic of the FAIRtax. So we thought it would be a good prerequisite if some of those folks signed in. So to the extent you're on, guys, we're taking names and we're going to report to the professor tomorrow whether or not you attended. Just joking. But if you want to, OSU students, click the little hand and let us know if you're on, and we'll take a note. But I'm glad you could join and be here. Also, quick thanks to Mark Maneri. Mark has, Ron had mentioned that these FAIRtax webinars have been going on for 10 years. Mark has faithfully been holding the torch of presenting on these webinars every month for 10 years and coordinating either guest interviewees or presenting topics himself month after month with a full-time job and with a family. So special thanks goes out to Mark Maneri for making this all possible. We did want this presentation to be very interactive. Feel free to ask a question at any time. We'll be monitoring the questions, and we can even stop real time. This doesn't have to be too formal and ask questions. I will stop after the introduction of what the FAIRtax is and ask questions, and then we'll do Q&A again at the end of the session tonight. And in all, the session shouldn't go more than 1 hour. So let's get right in. What is the FAIRtax for those of us who maybe don't know that much about it? The FAIRtax Act, which is HR 25 and S18 in the House and Senate, is 131 pages, double-spaced. Now, I have my copy printed out, and it's 74 pages in total. It's not double-spaced. And don't ask me about the math in that. I'm a CPA. I'm not a mathematician, but mine comes out 74 pages. So it's not a big piece of legislation when we think about length. Currently, with our income tax code, which includes actual legislation, the detailed tax regulations, interpretations, and tax court rulings, there are about 77,000 pages of income tax law that every American is responsible for understanding in totality, as it relates to their specific circumstances. So about 100 pages versus 77,000 pages, just to give you a little bit of perspective there. The FAIRtax creators based the FAIRtax system on the following principles. It has to be simple, fair, voluntary, transparent, and good for the country. No winners and no favorites. So tax and its origins. The FAIRtax, although it wasn't first called the FAIRtax, was not created by any politician. And so I realize at this point, for most of us on both sides of the aisle, I could simply drop the mic and we could all agree that the FAIRtax sounds great based on that fact alone. It wasn't created by a politician, and we could call it a night. Kidding aside, the concept began when a businessman was lamenting to one of his colleagues in the mid-1990s about how much time was spent on tax planning strategies in consideration of tax consequences of various alternative business endeavors that his company may or may not pursue, and how many times these discussions would consume entire board meetings rather than on spending time considering the business and how it can make better products and serve its customers better. His friend and colleague challenged him, basically said, hey, man up and do something about it. Come up with a better system of tax collection in the U.S. This man took the challenge, and two of his colleagues and himself, they embarked upon a fact-finding mission to discover what a better tax collection system might look like. They didn't have any agenda, preconceived notions of what worked best, but they knew there had to be a more up-to-date modern system to collect our nation's treasury receipts than the current antiquated income tax system that began back in 1913 when the 16th Amendment to the Constitution allowed an income tax to be collected. Since originally under the Constitution, based on Article 1, Section 9 of the Constitution, that required any direct taxation to be based on each state's proportional population. So it was ruled that income tax was actually unconstitutional. So these men spent around $20 million of their own money over a period of years in the late 1990s to commission multiple research studies at universities and initiatives and focus group outreach. And by the late 1990s, the FAIRtax was birthed and actually first introduced into legislation in 1999 as HR 25 by a congressman in Georgia, where every 2-year congressional cycle, it gets reintroduced as HR 25 again. Most recently, in January of 2017. So the Americans for Fair Taxation, otherwise known as AFFT, is the grassroots organization that supports the FAIRtax, and it's a nonpartisan 501c4 organization. So this means that it's not a Republican plan, it's not a Democrat plan, it's not a communist or a socialist plan, and it has absolutely no party affiliation. This is good because as I dive into the details that underlie the FAIRtax, I see so many aspects of the plan that Democrats will love, Republicans will love, that the Green Party will love. It's actually a boon for environmentalists. And the overall conclusion I reach is that this is truly a common sense plan that we as humans, not elephants or donkeys, can all agree on. This common sense plan results in the same amount of national treasury receipts as we currently collect. So same amount of receipts comes in. This isn't a tax cut plan, a spending cut plan. It just brings in the same amount of receipts in a different way. But it drastically reduces, if not almost eliminates, the $693 billion of annual current illegal tax evasion that we experience under our current income tax system. based on current published IRS data. The FAIRtax, like we said, it's not a spending proposal. That's a different debate for a different venue. We're here simply to espouse a more efficient and effective system of collecting the funds that our government determines it needs to administer the government. So what are the key aspects of the FAIRtax? It is a national consumption tax on purchases of all new goods and services, currently estimated to be at a 23% inclusive rate in order to be revenue neutral. So same amount of money coming in. It's really a different way to conceptualize how we as Americans fund the federal government. And it's hard to wrap your head around it. We're so ingrained in an income tax mentality, you'll catch yourself, like I've caught myself in the past, thinking back to income, but you really have to think consumption. So there are no winners and losers, no industries, categories, or types of items, or any other qualifying feature that results in unequal treatment. Since the income tax code is the second most lobbied industry in Washington, second only to pharmaceuticals, the FAIRtax will face stiff opposition from lobbyists since all things are created equal under the FAIRtax. The only item that could be thought of as an exception to this principle is the fact that expenditures for education, for secondary education, are considered an investment and are specifically not taxed with the FAIRtax. This means that when you pay your college tuition, there will not be the FAIRtax added to the cost, which nearly halves the cost of education for many, since, without getting into too much detail, pre-tax dollars will be spent on education compared to our current income tax system, where we spend after-tax dollars for college, which if you make a $1,000 tuition payment, depending on your tax bracket, you might be having to make and bring home $1,400 or $1,500, and then after taxes, that yields $1,000 to make your tuition payment. So there's a big difference there. So what does this mean? There's no more income taxes for individuals or corporations. This means that there are no individual or corporate income tax returns to file, and no consumer record-keeping requirements. No more shoe boxes full of receipts. The FAIRtax replaces about 96% of our current federal tax receipts. It doesn't replace a few items like the federal gasoline tax you pay every time you fill up your car at the pump, but virtually all Treasury receipts are replaced. Specifically, it eliminates and replaces the income tax, the corporate tax, AMT, that's alternative minimum tax, the death tax, or in more civilized circles, what we might refer to as the estate tax, capital gains tax, self-employment tax, gift taxes, and FICA. So that's the Social Security and Medicare tax, which are the most regressive tax of all and have the horrible effect of hitting the working poor the hardest, while the wealthiest among us, those not earning a paycheck with a W-2 each year, but living off investment capital gains like a rich investor such as, say, Mitt Romney. I'm not picking on him, I'm just using a name we might all recognize, who doesn't really pay a dime into Social Security or Medicare currently because they're not an employee for anyone. So remember that only an employee getting that W-2 is paying that payroll tax that funds Social Security and Medicare. Right now, the uber wealthy are not funding Social Security and Medicare. Over 40% of all the Treasury's receipts come from this regressive payroll tax, meaning almost half of our Treasury is based on this regressive tax scheme, hurting our working poor head on. So this means that with no federal and FICA withholdings from your paycheck with the FAIRtax, you would keep your entire paycheck under the FAIRtax, and any withholdings you still have are completely voluntary, like a 401k savings contribution. Even with paying a little bit more for our purchases, PhD research studies show that the average household will have $8,500 more per year in take-home pay. We call this purchasing power. So after you have paid extra FAIRtax at the register, by taking home your whole paycheck, as well as a few other concepts we'll cover here in a second, like the prebate and the elimination of embedded taxes and everything we pay, you're going to have more purchasing power with the FAIRtax based on empirical data. And lastly, the IRS and all the horror stories that it embodies is eliminated once and for all with the FAIRtax. So prebate, let's move on to this next section. The first argument against the FAIRtax when people hear it's a sales tax is that it's regressive and will hurt the poor, meaning that a flat sales tax is much harder to pay for the working poor relative to people that are wealthier. Let me tackle this head on. The FAIRtax is not regressive. It includes a monthly prebate to all U.S. citizens, reimbursing them for their FAIRtax spent on the basic necessities of life based on the annually published Department of Health and Human Services poverty levels. So for example, based on 2017 DHHS poverty guidelines, $32,000 and change is the annual poverty level for a family of 4, which means that about $7,500, which is 23% times that $32,000 and change, would be refunded in advance, called the prebate, back to that family, about $623 a month. Each month, to reimburse them for the fair tax they would have paid on their expenditures up to the poverty level that month. So they're effectively untaxed on the basic necessities of life. This is a similar concept to a standard deduction, but works even better. And when you dig into the fair tax plan's PhD research studies, the prebate actually makes the fair tax more progressive than our current graduated income tax system. So this means that the effective rate of tax you pay on your consumption gets higher and higher the more you spend, the richer you are, due to the prebate. Although the fair tax is a single 23% rate, the prebate injects an incredible amount of progressivism, if you will, into the fair tax consumption rate structure. So let's move on to this concept of embedded taxes. And the fair tax also eliminates embedded taxes that have ingrained themselves into the cost of every good and service we purchase and consume every day. This was a difficult concept, admittedly, for me to wrap my head around at first. So a study undertaken by Dale Jorgensen, he was the head of Harvard's economic department some years ago, concluded that on average, about 22% of the cost of everything we purchase is made up of embedded taxes along the way. What does this mean? So a few examples are when an employer must pay the 7.65% fat FICA match for every employee's wages that they pay. Sometimes we forget that the FICA match, or that the FICA taxes we pay each paycheck, is also mandated by the income tax code to be matched by our employers. So it is another cost of doing business that gets embedded into the cost buildup of whatever product we buy. Also consider the federal income taxes that corporations pay. Again, another cost of doing business that gets ingrained into the total buildup of costs that they then add on their profit margin to in determining the final retail consumer prices we pay. These taxes build up when we consider the many stages an item goes through before it reaches the end consumer. For example, in the first fair tax book, they went through this loaf of bread example. So when we buy a loaf of bread, the wheat farmer pays employee FICA matches and federal income taxes, and the cost of the machinery he or she buys has embedded tax costs included in its cost. And the gasoline refiner has federal tax costs built into the cost charge for the gas. And the twisty thing at the end of the plastic bread wrapper has federal tax costs built into it, and so on and so forth. And at the end of the day, the studies showed from Harvard that depending on the industry, around 22% on average of the cost of what we pay at the register is embedded taxes. One thing we often hear is political wrangling over whether and how much in the way of taxes corporations should pay. The bottom line is that corporations are a fictitious legal entity and don't have a heartbeat, and they don't really pay taxes. People pay taxes. So if a corporation's income tax costs go up, it adds to the end consumer costs or manifests itself in less returns to the shareholders whose 401k returns are less, or in less R&D and less U.S. product innovation. And you can see so on and so forth. The elimination of embedded taxes will also make our U.S. goods much more competitive abroad and help reduce our trade deficit. Imagine if we could sell the goods we produce domestically abroad with up to 22% of the cost dropping out of that cost buildup. Many other countries get their VAT taxes completely reimbursed from their governments when they sell their products abroad, which puts these countries at a clear, distinct advantage relative to the United States. So right now we've got Golden State and Houston in the NBA Western Conference Finals. Imagine if you were the Houston Rockets and you had to spot Golden State 22 points at the beginning of the game. The first tip-off, you're down 22-0. That's where American producers of goods and services are that sell abroad are immediately. You're spotting Steph Curry, 22 points. It's almost a hole too big to climb out of. And so no wonder our trade deficits are so massive. The fair tax single-handedly fixes this inequity. With competition in efficient or at least semi-efficient markets, prices will come down drastically. Some espouse, it's a natural objection, that companies would just pocket the extra profits if their tax costs go down and not pass along those savings associated with paying no federal income tax and no FICA employer matching tax, and prices won't drop at all. Economic principles and history prove this perspective dead wrong. The great thing about capitalism is competition. And with competition, it's all about market share. An example of this happened once with the 9/11 airlines tax some years ago, when the federal airline tax that the airlines had to pay expired before Congress could renew it. And for a few days, fares didn't move. They played a game of poker, literally a couple of days, until one airline saw the opportunity to capture market share and lowered their price. And at this time, airlines, they're going through a period of bankruptcies. They weren't doing great. So this is an industry hurting, and if any industry could have used a little bit more profit, it would have been the airline industry. They could lower their prices and keep the same profit margin. This one airline who balked first, since their tax costs had been decreased. So they took advantage. They lowered their prices, and within a matter of days, the other competing airlines had followed suit. And this is a prime example of how costs will come down quickly with the enactment of the fair tax. Of course, with different industries, the taxes will fall out at different rates, but for most, it'll come out very quickly because you've got competition. Now, will all prices come down 22% on average? There are some studies that believe that prices might come down a little less than 22%, since employee wages are sticky things, as Alan Greenspan famously once said. In total, though, there are three primary drivers as to how your personal spending power will change under the fair tax. First, you'll keep your entire paycheck. No more federal income tax or aggressive FICA payroll tax. Second, you'll receive your monthly prebate. For that family of four, that was over $600 a month. You get a check at the beginning of the month. Third, the prices of new goods and services will increase by the fair tax we'll pay at the register for new goods and services, to a large part offset by the elimination of embedded costs from the prices of everything we consume. Some studies show that this may, depending on the industry, result in a net 10% increase in prices. But again, you've got your whole paycheck and that prebate coming back. So it results in an actual net increase in purchasing power. And it's really, we're already paying taxes at the register in the form of embedded taxes. Now those taxes are eliminating, and you're just paying it with the fair tax at the register. So it's just really a different and more efficient way to collect that same tax. So the sum total of these three aspects results in disposable personal income increases of 2% in year one after enactment, based on these PhD studies, and a 9% increase in year 5 of disposable personal income, 9%. Real wages increase 10%, and US GDP would be up 2.5% in year 1 and 11% in year 10. If we get 2.5 to 3% GDP increases now, we're ecstatic. Imagine an 11% GDP increase 10 years after the fair tax enactment. So who pays the fair tax? Everyone in the U.S., whether we're citizens visiting here for tourism, legally immigrating here, or staying here legally, who spends money on new goods and services. Everyone pays. What if I buy used goods? Well, a key tenet of the fair tax is that it's fair. This means that items are taxed once and only once ever. So if you buy a used car, fair tax was already paid when it was bought new, you're not paying the fair tax. If you buy a used home, by the way, in 2017, 88% of all home purchases were of used homes. You don't pay the fair tax. The used goods market are expected to explode under the fair tax, stimulating a recycling renaissance where our environment is actually protected in new ways that previously our politicians could have only dreamed of. So how is the fair tax collected? It's collected by vendors at the retail level only. Just like states currently collect the sales tax. Currently, 98% of the U.S. population pays state sales taxes in their respective states, which actually represents only 45 of the 50 states. But the vast majority are paying state sales tax at the register. Vendors then remit their state sales tax receipts to the state authority. Not only their state sales tax collected, but under the fair tax regime, all the federal fair tax collected as well. But the great thing is they keep a 0.025% finder's fee, collection fee, if you will, for those funds that they remit to the federal government. To give you an idea of what that means, if you remit $1 million in fair tax to the state, you're keeping $2,500. The states then remit the federal fair tax collected to the U.S. Treasury each month, and they keep 0.025% of these funds as a collection fee for their efforts. So compare this now to the 155 million individuals who file individual tax returns and 100 million businesses that collect taxes. Now, some of those businesses their taxes, if they're sole proprietor or partnership, actually flow through to their individual tax returns. But a great many of those businesses have corporate and business tax returns to file. And each one of those, we're talking several hundred million entities, are tax collectors under the current system. And also, I don't know about you, but I don't remember ever getting a collection fee for sending my check in to the IRS on April 15th or quarterly. The vendors collect the fair tax at the register, and the Fair Tax Act specifically calls for the amount of the fair tax to be delineated on your receipt specifically, so you can always tell how much you're paying in fair tax. And I suppose if you were so inclined, you could save all your receipts and calculate how much in federal fair tax you paid for the year. But the great thing is you don't have to under the fair tax. There will be 250 million people in the U.S. paying the fair tax almost every day, and yet the payment of your fair share of the federal income tax burden will be completely anonymous. If there are any issues with tax remittance violations, the vendors are the ones who have to answer, not the consumer. And with the fair tax reimbursed for your necessities needed to survive and live, thanks to the prebate, your true unreimbursed federal tax expenditures are finally voluntary rather than compulsory. Fair tax only taxes us at the retail level where new goods and services are purchased or consumed. So this means that of the approximately $100 million total $100 million total U.S. businesses, of which around 2.5% are retail businesses, only 2.5 million businesses would need to collect the fair tax. So again, 97% of businesses won't collect the fair tax because they sell business to business. Only 2.5% of businesses are retail, like we think of Best Buy, Walmart. This then also means that the vast preponderance of businesses have absolutely no tax compliance costs, no tax burden, no tax remittances whatsoever. And here's another fun thing. Of the 2.5 million U.S. retail businesses that will be the ground floor collection agency over U.S. Treasury, only 15% of those 2.5 million businesses, around 375,000 businesses, comprise over 90% of all U.S. sales of goods and services. So large companies such as Walmart, Best Buy, Whole Foods, Sprouts, McDonald's, Apple is where the vast majority of our retail dollars are spent. Compare this now to 100 million U.S. businesses, 155 million individual family income tax filers, all of which are effectively collection agents for the IRS, with a massive inherent conflict of interest, by the way, that according to IRS statistics has led to our current $700 billion a year in illegal tax evasion that goes uncollected by the U.S. Treasury. So is this too good to be true? How would this not add to our deficit? The big, huge key answer we don't talk about enough with the fair tax is the tax base. Currently with our income tax, we have a $5 trillion tax base. Under the fair tax, you have a $9 trillion consumption tax base. So let me explain how in the world that's possible. Income comes from what? It comes from income. Our income tax taxes income. Spending or consumption comes from four things. It comes from income, it comes from savings, it comes from borrowing, and it comes from theft. So we have underground economy, illicit crime rings, gangs, illegal business, the oldest profession in the world. As people, as well as people in the U.S. illegally. Let's talk about that. Folks here in the U.S. illegally, they're probably paying state sales tax at the register, but all of them, virtually all, are paying no federal income tax, don't have a social security number, not paying any of their fair share of the federal income tax burden. Under the fair tax, they all of those categories pay their full federal burden when they spend and consume. You can't illegally evade it anymore. Also, since only legal U.S. residents receive the prebate, the fair tax will be an enormous force for expanding legal immigration into the U.S. This is projected, not in small part, due to the fact that based on, I guess, numerous statistical data, you will need many more employees in the U.S. when you have 11% GDP growth. You're just going to need more people. And so this is actually might solve a lot of the country's political problems. So the fair tax delivers on really all of the tenets that key economists, say will promote the most economic growth. What are these three tenets? Replace the income tax with a consumption tax, check. Replacing a graduated rate system with a flat marginal tax rate system, check. And lower marginal rates and a broader tax base, 9 trillion versus 5 trillion. The fair tax delivers on all three of these tenets. So let's talk about evasion. how is evasion not rampant under this FAIRtax proposal? And so the principle is, as long as human beings are involved, there will be tax evasion. Nothing is perfect, and we can never let perfect be the enemy of something great. So remember Will Rogers, one of Oklahoma's finest, since we're here in Oklahoma tonight, he was quoted as saying that the income tax has made more liars out of people than golf has. Now that's saying something. And being a businessman myself, and having played a few rounds of golf and seen a lot of people play golf, that's actually saying quite a bit. However, with the FAIRtax, evasion will be around the fringes for immaterial amounts. One sales tax evasion study showed that we may have a 2% evasion rate under a sales tax system as opposed to a 25% income tax evasion rate we experience each year at the tune of $700 billion a year, which is actually scheduled to increase to nearly $1 trillion per year by 2026, based on a recent 2017 PhD study by Dr. Richard Cibola. So when was the last time you walked into Walmart, Best Buy, Apple, Whole Foods, and let the sales clerk know that you didn't feel like paying the sales tax? If anyone has ever done that, please chime in now and press that hand-raising button. I'd love to hear that story and hear how that played out for you. The reality is, especially when coupled with the stats shared earlier on how 375,000 retail businesses make nearly 95% of all retail sales in the U.S., the enforcement effort under the FAIRtax will be drastically and significantly reduced. The IRS's annual $12 billion budget will be virtually eliminated. $12 billion. And the detrimental effects of an abusive IRS collection system that employs concepts such as civil asset forfeiture without any due process, probable cause or notice will be a thing of the past. So to avoid the potential of both a sales and an income tax, like many European countries have, the FAIRtax specifically mandates that the 16th Amendment that allows the income tax must be repealed within 7 years after the FAIRtax becomes law. This must be a separate legislative process because, you might remember from school, a constitutional amendment requires 2/3 of the House and Senate to pass and 3/4 of the states to ratify. So it has to be a separate piece of legislation. What else does the FAIRtax do? It makes April 15th just another beautiful spring day. So these, in a very quick nutshell, are the fundamental concepts of the FAIRtax. And really, there'd be no possible way we could spend so little time describing how our individual and corporate income tax system works with any semblance of understanding. So that goes a long way of really conveying how simple things are. And so, Ron, I'm going to pause right here before we get into our topic of freedom and see if there's any questions to answer.
No, the only comment I'm getting is Donald Coop is for some reason not getting the sound, but I'm not getting complaints from anybody else. So I think it's on his end. No, I'm not seeing any questions from anybody. I will ask one. All right.
Sure.
If the FAIRtax goes into effect, this is proposed, all the CPAs will be against it because they'll lose their jobs. They won't have anything else to do. How do you respond to that?
Well, Ron, good point. So here's what I say, and I was actually talking to one of my CPA buddies one night and drew it up on the whiteboard. And he's a capital markets guy. He works on deals with some of the big Fortune 100 companies you'd probably recognize by name. And when I told him how it worked, he said, "Wait a minute, this incentivizes savings." And he said, "I love that because that incentivizes investment. And when you incentivize investment, that incentivizes deals." And Ron, I don't know if you knew this, and most people don't. Accountants and CPAs have a very stereotypical understanding of what they do. When I took the CPA exam in 1996, do you know that 3 of the 4 sections of the CPA exam have absolutely nothing to do with income tax or corporate tax? And then that 4th section that covers taxes, only about half of it covers taxes. So it gives you it's a good representation of how CPAs do so much more than taxes. And in an economy with an 11% GDP growth, our what we'll call our tax line of service in a big 4 public accounting firm would transition into what I would consider the most robust deals practice we've ever seen. And so when companies do acquisitions, divestitures, they're having to raise debt and access the capital markets. We are very busy as CPAs, especially in the big accounting firms. And when you look at an economy with 11% GDP growth, and once CPAs understand it, would gladly replace that income tax line of service for an enhanced, amount of businesses, deal activity, companies to audit, companies to consult with on various, consulting capacities. So that's the short and thick of it. There are, Ron, just being honest, there's about 1 million people, CPAs and other folks that aren't CPAs, that would face some kind of transition, IRS enrolled agents and things like that. But, one of the great things about CPAs, like I said, they're a dynamic bunch, because really 75–90% of what a CPA has to know has nothing to do with income tax, if you can believe that. And that'll surprise a lot of people. And they're the most dynamic group of people that I've ever been around. And so I think 90% of those million people in the industry would actually fare very well, transition very quickly, very easily. And some of those folks that are just purely income tax oriented would have to retool a little bit, and that's just an honest transition.
Yep. And we've had in the various presentations we've done over the years, we've had several CPAs attend our presentations, and they said much the same thing. They would really dearly love to get rid of the income tax. I know when my wife and I had our small business, the accountant that helped us, we had an S corp, and the accountant that helped us with, make sure our books were correct, and he would generate a K-1. He called the tax code immoral. He really didn't like it, and certainly he helped people with it, but he would like to see it go away too.
Nice.
I'm not.
And
see if I get. Oh yes, we got more questions here. Yep. Okay. All right. Don's still having trouble with his. I think he got out of the webinar and got back in. Okay. This is from Trevor Engel. I may have missed this, but is the prebate the same for every taxpayer?
Yeah, great question, Trevor. The prebate well, I'll say it like this. It's based on your family size. And so for every family size that's the same, family of 2, family of 3, single, family of 4, the prebate is exactly the same. And there's a prebate schedule that lays that out. And again, it's simply the math of what the DHHS says the poverty level is for a family of 1, 2, 3, 4, or 5, or whatever. And you take that 23% times that poverty level. So that's basically trying to reimburse you for what you would have paid if you bought only new goods and services at the retail level up to the basic necessities of life. It totally reimburses you the fair tax you spend. Meaning, if you're a family of 4 and you spend $32,480, I think the number is, you would pay 0% tax. And right now, that working family of 4 with spending $32,480, so let's say their income is also $32,480, guess what? They might pay 0 income tax, but they're paying 8% in regressive payroll tax. And that's why it's so hard on the working poor. The fair tax completely untaxes the working poor way more than our current income tax system. So it's actually a boon for the poor. And really, Ron, I think the way if you say, well, Jade, money is a zero-sum game at the end of the day. And a few answers to that. $9 trillion tax base instead of $5 trillion tax base. And then who's paying more? The uber wealthy pay more with the fair tax. I use that Mitt Romney example. I think when his tax returns out in the 2012 presidential election, maybe he was at a 13% effective rate because he was only paying 15% capital gains, probably lowered for some charitable deductions. And guess what? When you're paying capital gains tax, 0 goes to Social Security and Medicare because you're not an employee with a W-2, no FICA. Mm-hmm. And so now when that uber rich, wealthy individual is spending like a rich person does, guess what? They're paying their full federal burden, probably closer to a 22.9% effective rate instead of a 13% effective rate. And so it solves that problem. So the uber wealthy actually lose a little bit with the fair tax, and it goes straight to the working poor or to Warren Buffett's secretary. Ron, you might remember the big hoo-ha about, hey, it's not fair. Warren Buffett's secretary pays a higher rate, not higher tax, but higher rate than Warren Buffett.
Yep.
And the FAIRtax is the only tax system that fixes that. Now, if Warren Buffett, although he's very conservative in his spending, he will spend more as a rich individual than his secretary, and his rate will be higher than his secretary.
Okay, we've got some more questions here. Barb Rudlick is asking what approach to use to spread the FAIRtax news and how to get more people on board. I wish I could answer that, Barb, but we're trying here in Florida, as you know, we're trying about everything we can think of, digital marketing, speakers bureau, and so forth. And I'm pleased to see the number of attendees here tonight. That's gratifying. But this is definitely an issue. How to get more people knowledgeable about the FAIRtax. We need that critical mass of citizens that once they understand it, they will demand it. And that means they demand it of their citizens. How to go about that, I think, is a multi-pronged answer, and I can't handle it in the terms of this webinar, but it's a very important question. It's something we're constantly working on here in Florida. It kind of goes along with the next question, and I don't know who this is from because in that the name it says waiting for name. So I'm sorry, but this person is asking, when we get close to November, should we get political candidates for federal, state, and local offices to be a part of this webinar? That would be great. That would be great. But here's something else you can do with your political candidates, and you don't. It's not. And as you stated in your question, it's not just for federal office, because people running for state and local office, some of them go on to run for federal office. So yeah, start early and go to their town halls and ask them a provocative question. Are you in, about the FAIRtax? If you're not in favor of the FAIRtax, why are you in love with the IRS? Something like that. Be proactive, but be respectful, and start asking about the FAIRtax. I know of a lot of local politicians here, county commissioners and so forth, that are very much in favor of the FAIRtax. They're not running for federal office, but they are running for office. So, yeah, engage the candidates at all level. You can engage them at town halls. You can call their offices. You can send them emails. But yes, we need everybody engaging the politicians. The next one was from Nate Matt. Sorry about that. Thank you for this. Son-in-law is just getting started in real estate. He is already a strong conservative, and we have not spoken about his current level of indoctrination into the home mortgage interest deduction. Please help me convey. Yeah, that's something we hear. If we go to the FAIRtax, I'll lose my home mortgage interest deduction. Well, actually, you'll get 100% of it because you won't be taxed on your income at all. That's
Can I add something to that, Ron?
Yeah, please do.
Neil Bortz had a wonderful analogy about someone who is complaining about losing a deduction because of the FAIRtax. He said it was like going into a grocery store that's giving away free bread and you're arguing with them because you have a 5-cent coupon.
That's a good analogy. That's a good analogy. Yep. Yeah. Yes, we will lose all the deductions, but there'll be nothing to deduct it from. No income tax. So,
Ron, I see another question here on how would the Social Security system be affected by Mike Hall. It's a great question. And when you read the FAIRtax Act itself, it's only a few pages, it actually mandates, I think it's something like 30–35% of all the FAIRtax receipts must go to Social Security and Medicare. And so it actually shores up Social Security and Medicare much better than our current system. So basically, you're not paying the regressive payroll tax, the FICA, but Social Security and Medicare are unaffected. Those benefits are still there. And like we said at the outset, this doesn't change any spending. This is simply a different way to collect the same amount of money.
And here's a question from Bill Matthews. Under the FAIRtax, will the government know how much money anyone earns? You will not. The only reporting you'll have to do is to the Social Security Administration so that they can, register it for your, retirement. But as far as filing a tax return, no. No, there'll be no more tax returns. Paying your taxes will be as simple as paying for an item at the register. That's it. You buy an item, you pay for it, you're done. You've done your due diligence. Or when you write a check to the plumber, it'll be included in that. And nobody has to know what you earn. It'll be your own business. Really returns a lot of privacy. We got a bunch of
You
more
may
questions.
have confused people that it's the businesses that will notify the Social Security as to how much their employees are making,
Yeah,
not
yeah,
the individual.
yep. This is from Carmen Benitez. I, pardon me if I mispronounced that. Um, what of the government wants to raise? Oh, what if the government wants to raise taxes to collect more money? Elaine, you want to take that one?
Well, if they decide to raise it, they cannot raise it on um, any certain demographic. It's raised on everybody in the entire country. And I don't think that particular politician would probably stay in office very long.
Yep, and I'd add on to that. The thing I like about the FAIRtax is if we need to increase our tax rate because maybe there's a war or who knows, you know what? The whole nation has to get behind it. There's no hiding between deductions and loopholes and caveats. It's just the rate. That's the only thing you have to debate politically, and so it makes it very transparent.
Yep. And
Exactly.
Randy's chiming in with some more information. 35.14 of the percent of the proceeds of the fair tax has to go to Social Security and Medicare. I think I'm interpreting this right. Um, and the rest of it goes to the general fund. So Social Security will be supported by everybody who's paying the fair tax. You're not going to get away from it. And as Jade was talking about, Mitt Romney or somebody like that who earns a living from interest and dividends, and those folks are not paying Social Security right now, everybody will be contributing to Social Security whenever they make a purchase of a new product or a service. So it's going to be a much broader base to support Social Security.
As well as that illicit underground economy, folks in the United States illegally,
Yep.
the oldest profession in the world, tourists, everyone's paying their share.
Okay.
And actually, cheaters, Ron, let me just say, in cheaters, I had a neighbor one time, and people almost brag about it. You know, most of them are self-employed, very nice cars, new car every few years, huge $90,000 cars. And I'm sitting there paying my full federal burden, of course, because I'm an honest CPA. But it made me sick inside. They're almost braggadocious about how they structured and how much income they reported and paid virtually nothing or little. And guess what? Those people, those we'll call them cheaters, and it's almost just ingrained into people's mental philosophies. That goes away because now my good neighbor in that location, which I will not name, he or she, when they go spend at the register, will pay their full federal burden, and the opportunity to illegally evade is taken out of their path. Some people say, hey, avoid the sin by, avoiding taking yourself out of temptation's path. The FAIRtax does that.
Okay, we got a couple more questions here, and then we're going on with the rest of it here. This would be a massive overhaul of the current tax system in the United States, granted. Do you have any idea how the implementation of it would go? So, Jade, I'm going to ask you that. Let's say Congress passed the fair tax right now and decided to put it into effect January 1st of next year. How would the implementation go?
Yep. So this is the way I see it going. It's a great question. And there's certain elements, if we're just being completely transparent, there's certain elements that, that a few elements will probably surprise you. But for the most part, we're pretty confident how the transition would go. One, you keep the IRS. I think it's for a period of 5 years to go through the last year of income tax returns and audits and kind of finalizing that old system. So the IRS would keep at least a shell of a group of folks around to finish the old income tax through the last year that it's in effect. So that's one thing. Secondly, there are some transition provisions in the FAIRtax Act That, if for example, you get into some weird transition issues. What if I bought inventory in November and December, and then I sell it, and so I bought it, with embedded taxes, but now I have to sell it with the fair tax. And so there's some provisions in those few months of transitions where you can get some of that fair tax reimbursed if you're a seller and a vendor. So those kind of things are proactively thought through, without getting into too much detail. And then here's the big thing, and folks, I encourage everyone to listen to Ron. Ron has FAIRtax Power Radio podcasts that come out every Friday, and they've done an episode on this before where they actually have a phone line where they pretend that they're the FAIRtax service people of the United States government, and people ask questions like, "Oh, where do I get those forms to file this year?" And they're like, "Sir, ma'am, there are no forms." And so the biggest transition is you kind of go, "Wait, I don't have to do anything," and it just kind of goes away. There'll be some intricacies at the fringes, obviously, like we talked about with inventory and things like that. But I think the implementation would be a lot smoother than people realize.
Yep. Let's see. I think we got a couple other. Mike Hall asked how would Social Security be affected. I think we handled that. This is one of the last ones till we go on. How will the fair tax affect retirees?
Oh, that's good. That's good. Now check this out, Ron. So as a retiree, the federal law now is you collect your Social Security check, you can be taxed on up to 85% of those Social Security check proceeds you get. So just to put that in perspective, what that means. So you've paid taxes your whole life, allegedly, that should come back to you in the form of Social Security because you paid your dues. Like Ron, for example. Ron's retired. I assume you're getting a Social Security check, you and Elaine.
Yep.
And then you have to pay tax on that again. It's like income, outgo, they got you every which way. And so first things for retirees, you're going to get your Social Security check. You get to keep it all now. You get to keep it all, and you're not having up to 85% of it taxed again. And so when you look at the studies, because there's PhD studies on how it affects almost every demographic, senior citizens are actually one of the groups that come out quite well, actually, because a lot, you can get granular here, but a lot of folks in your senior security years, you're not having that much housing cost anymore, or your house is completely paid for, and your expenditures generally go down a little bit on average versus when you're huffing and puffing and going real hard with kids and you're living your normal lifestyle.
Okay. There's one more question by Trevor. I'm going to save that until the end of the webinar here because we need to get going with the rest of your subject because it's about our lost freedoms, and I think this is really important. So let's go ahead with the rest of your presentation, and then we'll handle the rest of the questions.
Okay, thanks, Ron. So you see a slide here. What is freedom? It's important to begin a discussion about freedom with a brief background on what freedom meant and what it means to the United States of America and what it meant to our foundational principles. The concept of freedom is at the heart of what being an American is all about. No matter what political persuasion, background, race, ethnicity, etc. In fact, this very concept of freedom has been, for what many years in our history, drew millions of people from other lands to ours. The dream of living in a land where they were free to pursue their dreams, free to pursue a dignified life of business and providing for their family, free to worship freely, and free of a government dictating how they should live their life. America has been a unique experiment in human history where we haven't been ruled by those with absolute power, by dictators, despots, monarchs, tyrants, which most of humanity has only ever known. At the heart of the concept of freedom is the concept of individualism. Freedom, as it relates to a larger group, begins to become diluted. And as the direction of the group inevitably dictates or directions or courses of action that components within the group might otherwise find fault with, the freedom is lost. At the time of the drafting of the Constitution in 1787 and was ratified by the final state, Rhode Island, in 1790, a few years later, individual freedom was of such paramount importance that the founders insisted upon the first 10 amendments, the Bill of Rights, to enshrine in writing the individual freedoms that we believe as a country are our inalienable human rights. Thomas Jefferson, within the Declaration of Independence, asserted that all men are created equal that they are endowed by their creator with certain unalienable rights, that among these are life, liberty, so another word for freedom, in the pursuit of happiness. There is a growing movement that the broad, nebulous concept of the state or the greater good is the entity which demands and should command the greatest attention and adoration from us as a people. However, this flies in the face of America's foundational principles of individual rights and protections that the Bill of Rights guarantees, individual rights. For example, when the greater good's welfare is at stake, who decides what the greater good really needs? When the greater good's needs are espoused, if the individual's liberties and freedoms get in the way of the greater good's ideal, then those individual rights can be taken away without any further recourse because it's for the benefit of the greater good. When we eliminate the personal stories, personal situations and facts, when we remove the face from a particular problem, scenario, or injustice suffered, all strategies, tactics, and actions are permitted, no matter the cost to the individual. The founders knew this perspective was dangerous, and it had been the human history up to that point, and enshrined in our foundational documents protections at the individual level to ensure the concept of freedom and liberty, which are only ever definitionally conceptualized at the individual rather than at the group. So the Constitution acknowledged that the risk of a larger state or greater good becoming the more important entity and took further steps to ensure this didn't occur. One of those steps being embedded the concept of states' rights, and it was embedded into the fabric of the U.S. The founders believed that the states, and even further local jurisdictions beneath the states, rather than a large central government, were more likely to reflect the interests of their citizens. So the framers concluded that the larger federal government should only have the primary or exclusive power in a few instances, namely, if they were national defense, immigration, issuing currency, raising revenue to operate the federal government, and foreign relations. In fact, the 10th Amendment to the Constitution states that the powers not delegated to the U.S. by the Constitution, nor prohibited to it by the states, are reserved to the states respectively, or to the people. So it basically says, unless we, the Constitution, say you can do it, federal government, you can't. And the states or the people can do that. So this reinforces the principle of separation of powers and provides that powers not specifically granted the federal government are reserved, like we said, to the states and people. So why is such an antiquated concept as freedom important to continually discuss? Ronald Reagan said that freedom is never more than one generation away from extinction. Thomas Jefferson said that the price of freedom is eternal vigilance. So what does the IRS know about you? To segue as we think about freedom. Just a few things, Ron, that the IRS knows about us. They know our income, how we get it, from whom we get it, and when we get it. The IRS knows our expenses, to whom we pay and for what. That's a fancy word for deductions. They know our car, type of car, how many miles you drove for work, how many miles for charity and personal purposes, the make of your car, the year of your car. They know your medical expenses, whether or not you have health insurance, that Obamacare individual mandate tax. That was repealed, however, so 2017 was the last year they might have to know that. Home size, square footage, whether or not you own your home, its cost, home improvements made. You know, when you have a personal office deduction, you got to report all that. Bank accounts, your deposits. If any cash deposits are greater than $10,000, they must be reported to the IRS. Your interest earned, whether you have foreign bank accounts, etc. Your investments, your stocks, your bonds, your interest earned, your dividends received, your capital gains, your capital losses, charities. Which organizations do you give to? For how much and when? Your mileage to those charitable events. Whether you're saving for retirement and college, including how much each year, how much you earned on those, which organizations, and when you withdraw that money. And Ron, that's just the tip of the iceberg of what the IRS knows about us. So let's move the slide here. We think about IRS abuses, and Ron, I'll cut a little bit out of this presentation so we don't go over, but there are numerous, and your FAIRtax Power Radio episodes have numerous episodes dedicated to this. Civil asset forfeiture, the ability to just take someone's property, their capital, their bank accounts without any due process whatsoever. The number of abuses is extensive and very, very myriad. So which Bill of Rights amendments are affected and how? We talked about the Bill of Rights earlier. So the interesting thing is there's this legal concept called in rem, I-N-R-E-M. I assume it's Latin, but I haven't looked it up. It basically means the power about or against a thing. So the power a court may exercise over property. And so what this means is if Ron and Elaine are operating an illegal business, allegedly, you know what? I might not have evidence about Ron and Elaine, but I can seize their cash in their property because in the concept of in rem is that cash is guilty, that property is guilty of a crime. And so cash doesn't have Bill of Rights. Cash doesn't have the protections of due process and a jury of their peers and all the Bill of Rights. And so that's how the IRS can just go and seize your property under this concept of civil asset forfeiture. So let's go through some of the amendments here. First Amendment, free speech. Some of you probably remember our president, and I think it was right after JFK died all the way through 1968, LBJ, Lyndon Baines Johnson. Well, in 1954, he was a senator. And the basic story goes, he didn't want some of his Texas senators or opponents to be able to say bad things about himself. And so he passed what was known as the Johnson Amendment, or got passed, and it prohibited 501c3 nonprofits from endorsing or opposing political candidates. And it stayed the law of the land ever since. And so basically, if you're a charitable organization, your free speech, First Amendment right, is compromised. Fourth Amendment, illegal search and seizure. We talked about in rem, civil asset forfeiture. Without even notifying you, you know, it can be a bank teller kind of ratting you out for making large deposits. Without even notifying you, the IRS can take your money. There were a recent study, 280 cases, 91% of the seizures ended up at the end of the day being seized from people doing nothing wrong. And even without accusation, their goods were stolen. The IRS determined it was easier to grab the money from honest people than the hard work needed to go after the real criminals. Ultimately, in a lot of these cases, the IRS admits that the victim did nothing wrong after bankrupting the company or causing them years of disruption of their lives and their businesses and their legal fees and their hassle to fight the IRS claims. The vast majority, the IRS at the end of the day says, yeah, you're right, sorry, you're all good, and then leaves them in shambles. And it's funny here, the IRS legal fees, by the way, they have to pay lawyers. They're being paid by the very victim, the taxpayer that they're pursuing, which is even more ironic.
Yeah.
So well, this amendment also requires a warrant to only be issued if probable cause is present. The IRS's summons authority under Tax Code Section 7602 allows it to obtain records of every description from any person without showing probable cause and without a court order. In recent years, there has also been a big expansion in information reporting required by the IRS and in its computer searching for personal records. Let's go to the Fifth Amendment, due process. You cannot deprive the individual of life, liberty, or property. It also says that private property shall not be taken for public use without just compensation. Great. Due process requires that government provide accused citizens a clear notice of a claim against them and allow them a hearing before executing enforcement action. But the IRS, in many summary judgments, they enforce them prior to any judicial determinations. You're guilty, you're presumed guilty until you can prove your innocence in a court of law. The burden of proof lies with the taxpayer, not with the IRS, which contradicts our 5th and 14th Amendments, where the 14th Amendment guarantees equal protection under the law. Shifting the burden of proof. So we just talked about, you know, the burden of proof being on us as taxpayers. For non-criminal tax cases, the vast majority of cases, the tax code reverses this age-old common law principle that the burden of proof rests with the accuser. Except in some narrow circumstances, the IRS does not have to prove the correctness of its determinations. Just pause for a second. That's ridiculous. When the IRS makes erroneous assessments, as it often does, citizens carry the burden to prove that they're wrong. Also, the Fifth Amendment guarantees us the right not to be forced to self-incriminate. Forced self-incrimination, you know, when people say, I plead the Fifth, the requirement to file tax returns under penalty of perjury operates to invalidate the Fifth Amendment protection against self-incrimination. Citizens face a legal dilemma. On the one hand, they can refuse to file a tax return and might expose the citizen to prosecution for failure to file. On the other hand, disclosing information sought in tax return constitutes a waiver of Fifth Amendment protections. The IRS can and does release that information to federal, state, and local agencies for both tax and non-tax enforcement purposes. So Let's move on to the Sixth Amendment, individual right to a jury of your peers. In the tax courts, you do not have that right. You right to a speedy and public trial, rights to this trial being by an impartial jury of your peers. All of that's gone. Despite the Sixth and Seventh Amendments guaranteeing a trial by a jury, the federal tax system sidesteps such protections. To contest an IRS tax calculation prior to assessment, one must file a petition in the U.S. tax court. But since this is an administrative court, not an Article III court, no jury trial is required. To obtain a jury trial and related rights for civil tax cases, one must file suit in a U.S. district court. But before that can happen, the alleged tax, penalties, and interest must be paid in full. So just really, you know, it actually just boggles the mind. So lastly here, Ron, and let's take some Q&A. If you adopt the fair tax, you know, what can you declare independence from? So we talked about a lot of it: the IRS audits, IRS intrusion, a weaponized IRS against political opponents. This happens on both sides of the aisle, most recently with Lois Lerner and in the past administration. Receipt and record keeping, payroll withholding taxes. You can declare independence from unreasonable search and seizure, productivity penalties. Many companies and individuals don't grow or advance because they don't want to jump into the next tax bracket. W-4s, W-2s, 1040s, tax returns, tax return instruction forms, all gone. Organizations having their speech and opinions restricted. Loopholes, lobbyists, favoritism that produces exclusions, exemptions, and carve-outs for some but not for others, and big business but not small business. Those are all gone. Everyone's treated equally under the fair tax. And lastly, Ron, class warfare. Class warfare has been a horrible tool wielded against us and dividing us in America, and the tax code is a huge culprit of that. You know, a few other quick things, Ron. Onerous business compliance costs. There's about $600 billion a year businesses pay to comply. Let that sink in. $600 billion. 8.9 billion hours a year, time spent complying. Think of us as Americans and our ingenuity, in our resourcefulness, what we could do with 8.9 billion hours in $600 billion. And lastly, you know, the American goods sold abroad being disadvantaged with the embedded tax costs built in, that's gone as well. So those are some of the things we can declare independence from. But Ron, we better wrap it up and take some questions if there's any.
Yep, there's one more question. This is from Trevor, and it is, how do you plan to get influential, very wealthy people on board with the fair tax, knowing that they will have to pay more under the fair tax? That's a good question. I mean, for instance, my wife and I live in Ocala. John Travolta lives near Ocala. He lives outside of Ocala. We've never gone to dinner together, okay? We don't rub elbows with the very wealthy, influential people. So how does the average fair tax supporter get these people involved? Directly, I can't answer that, but I can say that if you do whatever you can, for instance, if you're on Facebook, Twitter, other social media, of promoting the fair tax, do whatever you can to help other people become aware of the fair tax. If they like to read books, there's several books on the fair tax. It's called The Fair Tax Book by Bortz and Linder. It was published in 2005. And then they came up, you know, some people criticized it, said, well, what about this? So they published a second book in 2008, The Fair Tax Answering the Critics, Answering the Critics, again by Bortz and Linder. If you're more tuned to Social Security, there are several Facebook pages. The Americans for Fair Taxation, that's Facebook, Fair Tax Official. The Fair Tax guys have Bob Paxton and myself. We do a weekly podcast. You can get that and just look for Fair Tax Power Radio on iTunes, iHeartRadio. It's even on YouTube. Our main platform is Spreaker.com. And watch out, in the next few weeks, we're going to expand that to another medium where we're going to do podcasts with video too. I mean, we're actually going to be doing a live show pretty soon. As soon as I get some more details, I'll get that out to everybody. But so there's a lot of ways in which you can help other people learn about the fair tax. Whatever their bend is, like I said, they like to read books. Okay, there's books. They like social media. There's social media. All right. They like to listen to podcasts. We have podcasts. They like the webinar. Okay, we have this webinar.
Hey, and Ron, with the rich people that this, the John Travoltas this gentleman is talking about, I've had a few conversations with some of my partners at the firm, and there was one gentleman, I'll admit, I told him about the fair tax, and he's like, oh, I really like to spend a lot. I like new things. I don't think I like the fair tax, but the vast majority of uber wealthy people I talk to, guess what they say, Ron? It's like, wow, this would be so good for America.
Yeah.
An efficient way to collect our taxes.
Yeah.
If I'm making and spending $700,000 a year, $1 million a year, you know what? It's for, if I'm that Mitt Romney uber wealthy, this is for the country. And 90% of uber wealthy people that I talk to, they get that thread of patriotism going in their mind, in their words, and they are for it. I think you'd have 10% are going to, be, selfishly reluctant, and we got to expect that. So to more directly answer that question, I think you talk about, is it better for the country and your children and grandkids? And a lot of these uber wealthy folks are, past 50 years old and maybe past 70, and they're already thinking, I'm not going to be here, for, 50 years from now. And they're thinking about their posterity. And this is better for the country. And when you think about how it makes us more economically competitive, this saves the country for 100 years. And most uber wealthy people I talk to get on board real quick. But there's going to be a few that never will. And that's okay.
Yep. There's a couple more. There's a comment here from Bill Matthews. Is there a transcript or recording of this webinar available? You talk so fast, it's hard to take notes. But yes, Bill.
First of all, sorry about that.
When we are done, when we close the webinar, it automatically, we are recording this. So it will be recorded as an MP4, a movie, and it will be on FLFairtax.org. That's the Florida fair tax site, FLFairtax.org. And there, and that's a fairly new website. We just got a brand new website that I think is gorgeous. And you'll look for resources, and somewhere there'll be an archive of the webinars that will be there. So yes, you will have that. Excuse me. I think one of the last questions here. Are there any statistics about how many new businesses would be created under the fair tax? Jade?
Ooh, that's a great question. I have not seen any direct. That'd be a good study in the Fair Tax organization. The AFFT does employ PhDs to do studies. So I would encourage everyone to join the 1040 Club. You donate $10.40 a month. That helps fund those PhD studies, by the way. But that would be a great study, Ron, I think, because,
I think our Dr. Walby has handled that subject. Here, we're
really?
lucky here. Yeah, I believe so. I believe it's one of the white papers. I think. Now, I have to remember who I'm talking to. Jade has read all the white papers, all right? I've barely struggled through the executive summaries, but I'm pretty sure they handled something about, how it would be created, how business would be affected. So the white papers are on the national, the main website, fairtax.org. Fairtax.org. There is a section that has the white papers. Dr. Walby is here in Florida. We're lucky enough to have her as a board member on the Florida Fair Tax Educational Association, and she is the research director on the national site, national group, the Americans for Fair Taxation. And I'm pretty sure she's handled something similar to that question. So, yeah, the white papers are there. Barb Rudlick sends a great presentation, much info. Yep. And the last question before we have to hang it up here, would foreign companies selling their goods in the United States be responsible for paying this tax as well? How would they be held accountable for it? Well, I can answer that one. They wouldn't pay the tax. the consumer would. Their product being purchased in this country is subject to the fair tax. And so the retailers will have to collect that fair tax just like any other sale and send it on to their state tax collector, who then sends it on to the Treasury, the federal Treasury. So yes, foreign companies selling goods in this service, the goods will be taxed, but like everybody else under the fair tax, it'll be the final consumer that pays for it, not the companies. But it will level the playing field because their product coming into our country will be assessed, when it's purchased with the fair tax. Our products going out of this country are going to be free of that 22% embedded costs. So our products are going to be much more competitive in their market, and their products will be subject to the fair tax just like our own products. So yep, it's going to really level the playing field. Yep, nobody's going to get away with it. The beauty of the fair tax is so darn simple. It is so simple, it's almost impossible to get around it. Let me make one last announcement. As I said before, this webinar has been going on for 10 years and has been supported and financially by the Florida Fair Tax Educational Association. Except for tonight, we had great attendance tonight. Our attendance has been difficult in the past, and the board is going to make some decisions here on June 2nd. It's possible we may go to a quarterly webinar, and we're probably going to look for a different platform, one that's less expensive than GoToWebinar. Won't make any difference to you folks because whatever platform we're using, it'll be free to you. And we will make sure that everybody gets announced. We announce the webinars for everybody. So there will be some decisions made about the webinar in about a week and a half, but we will continue it. It may not be once a month. It might be 4 times a year. But yeah, we are going to continue the webinars. And Jade, anything else for the good of the order?
No, apologies. There's just so much about the fair tax. I love to get it in. I apologize for the quick cadence of my presentation. But Ron, thanks for inviting me and letting me present. I really espouse the fair tax and think it would be great for our country and our children. And thanks for giving me the time.
I enjoyed your presentation immensely. And yeah, you do talk fast, and there's a lot of stuff in there. But we do our best to collect the information. So. So, oh, wait a minute.
Frankly, Jade, I think you did a great job.
Yeah, I want to be fair to everybody. Can you repeat the website where the webinar will be? Yes, it is. It will be on FLFairtax.org. FL as in Florida Fair Tax. FL Foxtrot Lima Fairtax.org. Going back to my Navy days, okay? Yes, and Josh says the fair tax serves as an import tariff. In a way, it does, yeah. And the last one from Bill is there a need for funding of the fair tax? Oh, yes, indeed. The state organizations and the national organizations for the fair tax, the Americans for Fair Taxation, and here in Florida, the Florida Fair Tax Educational Association, and I think most states have some kind of a fair tax. We are all volunteers, completely 100% volunteers, and yes, we are struggling for finance. And we're also, I'll admit this, since Neil Bortz retired from the radio, we're also struggling for a champion, okay? Things were going pretty nicely with the fair tax when Bortz was talking about it on the radio every day. And since he retired, interest in the fair tax has waned while interest in other items has expanded. So yeah, we need a champion. And yes, we definitely need funding for both the national and the state organizations. Jade mentioned the 1040 Club for the national organization. That is, you can go to fairtax.org and sign up for the 1040 Club, in which you commit to a repeating donation of $10.40 a month. And don't forget your state, whatever state you're in. Most of the states have a state fair tax organization, and we could use your help too, because again, we're all volunteers and we're all very passionate about the fair tax. My wife and I have 7 grandchildren. We have a burning desire to get rid of this income tax system before our grandchildren get too old, and we're getting close. We got a couple of them in college here, so we need to get this done. So, yeah, there's definitely a need for funding, and I appreciate that question. Okay, we've gone over, but I think we've kept most of the people here. Very pleased that so many people tuned in tonight. We will let you know when the next webinar is, and I think we can talk Mr. Wally into doing it again, and you know we will help out. So. A big good evening to everybody. Thank you for attending. Thank you for taking your time to be with us tonight. Truly appreciate it. I hope you found it was worthwhile. And again, get out there and promote the fair tax. Get other people on board. This is how we're going to get it done. So thanks so much, and good night, everybody.
Good night and thank you.